Okay, so hello everyone, and today we are beginning with yet another paper, that is paper 5. Okay, and similarly paper 6 for the new syllabus. Okay, 99% things are similar in both the syllabus. For the new syllabus, there is two more accounting standard. Okay, which we will do it separately for the new syllabus students, and for the old one, everything remains the same. Okay, so we're just starting with it. Today is our first session, so we'll have a very basic discussion. Okay, and the students who are sitting right now with me, okay, they have been associated with accounts once in their life. Okay, but for those who are seeing it on record, and you are from science background, or maybe you have not been in touch with accounts and all. Okay, so for that, okay, so for that you can ping me. Okay, we can have a separate session on the basics of it. Okay, now to start with the financial accounting, the very first thing which we need to identify, or which we need to understand, is that why is this needed. क्या जरूरत थी ये फाइनेंशियल अकाउंटिंग बोल के एक सब्जेक्ट, एक फील्ड ऑफ स्टडी लाने की अलग से. Okay, why actually it was needed? Now the answer lies within the name itself. Okay, there are two words, financial and accounting. Correct. Financial and accounting. Financial itself has a separate meaning, and accounting itself has a separate meaning. Financial meaning means something which is monetary. Correct. Something which is monetary. And accounting means in layman language, keeping the records of it. Correct. Like if for example, okay, I'll not go into general entries and all, but suppose for an example, if today I have sold something, correct, so what I'm supposed to do in accounting, I'm supposed to record that sales. Correct. I am supposed to record that sales in any books. Okay, say we'll not even discuss the name of the books and all right now, but yes, we'll record that in some book, that today I have sold something, okay, for rupees 20,000. Correct. So financial itself has a meaning that I think there was a lag. Correct.
Yes, sir.
I felt it. Okay, I think now it's not there. Yes, it's not there. Okay, so financial itself means something which is monetary, and accounting means something, okay, we keep on record of, or okay, and financial accounting means keeping the record of transactions involving monetary value. Correct. A very layman language, a very basic definition, which I think everyone can generate by themselves. I'm sorry. Okay, so before starting with the financial accounting, what it is, okay, how things are dealt with here. Whenever we talk about accounting, whenever we talk about the name, whenever I talk about the name accounting, can anyone name me few things that they have heard ending with the letter accounting? Like different kinds. If you have heard, you have one subject itself.
Cost accounting, management accounting.
Correct. So the very first thing comes is the financial accounting itself. Financial accounting itself. Okay, the second which comes is the paper 8 in your syllabus, that is cost accounting. Okay, and the third one, which is there in the new syllabus course, that is management accounting. Okay. So these all the three are na, a kind of different aspects, okay, of accounting, different aspects of accounting in relation to that, in relation to what, like their uses, okay, their way of interpretations, okay, their users. Okay, I'm saying that their uses means for what they are used for, and users who are using it are different. Okay, the the logic behind them means why they are prepared for are different at different stages. Correct. Now, before all this three na, there is a one more part. Okay, before this three na, there is one more field, okay, which is related to accounting, okay, but has a name of bookkeeping. Ever in your life, I'm very sure you have heard about it. Bookkeeping. Correct. Now, what actually is a bookkeeping? Now, if I give you the definition, then you will say that, then you'll automatically understand why I am saying that before this three, na, bookkeeping is done. Why? Bookkeeping is what? Bookkeeping is nothing. Bookkeeping is art of recording business transactions, or we can say business affairs. Art of recording business transaction and business affairs. Don't you think that this step is above all the three: financial accounting, cost accounting, and management accounting? Because at a grassroots level, if you do not even record anything, how can we import data to the different fields of accounting? Correct. So bookkeeping is also assumed to be a part of accounting. Okay, but whenever we'll read na financial accounting, cost accounting, management accounting, specifically financial accounting, we'll see na that financial accounting is dependent on the bookkeeping for the data. Okay, and bookkeeping is what? Bookkeeping is nothing. Now, if I give you a layman example of bookkeeping na, suppose for an example, okay, you are purchasing an asset. Okay, if you are purchasing, say for example, we are purchasing a furniture, correct? So what actually is a bookkeeping? The bill that you have got, okay, with the help of that bill, you record something. I'll not say that you will do debit credit over here, but yes, you will record something from that voucher, from that bill, okay, from that slips, from that invoice, anything. From that, you will record something in your book, okay, so as to serve as a purpose for when you will be preparing your financial accounting, na, you get the data that on this day that transaction happened. Correct. So bookkeeping is nothing. Bookkeeping is the art of recording business transactions or business affairs or day-to-day affairs. Okay. And what are its primary source then? Its primary sources are vouchers, invoices, okay, and etc. Any other thing that you feel. Okay. Vouchers, invoices, any other thing. So bookkeeping is the very primary source of, I can say, a primary stage where accounting begins. Okay, here we are not classifying anything. Here we are not recording it according to the rules, according to the conventions, okay, according to the principles that are generally accepted. Okay, have you heard about the word? Have you ever heard about the word gap? Yes. Have you ever heard about the word gap?
Yes, sir.
What does that stand for?
General accepted accounting principles.
Generally accepted accounting principle. Generally accepted accounting principles. Generally accepted accounting principles. Okay, what it is, okay, why we actually say this word, we'll come to that discussion at a very basic, at a later stage, today itself maybe. But what I mean to say is that understand how accounting even starts. Okay, how does it even starts, means from where it is born. Okay, so what happens if I'm a business entity, if today I have bought something, if I today have sold something, definitely I would have issued or I would have received the vouchers, invoices, bills, okay, anything. So what I'll do with the help of those vouchers, invoices and bill, I'll just do a temporary recording, not anything like debit credit, just I'll record that yes, I have sold something on this date and I have made an expense. If I've sold something, I've got this, I have expended this much of expenditure I have done, maybe in cash, maybe in bank, check, anything. Okay, now what actually happens now, bookkeeping is a very grassroots thing. Okay, and I think this is the first and this is the last time we're discussing about the bookkeeping. Okay, now after the bookkeeping is done, okay, now after the bookkeeping is done, that means we have that source from where we can record transactions. Correct, we have that source from where we can start our recording of the transactions. Okay, so what I'm saying, bookkeeping, it serves as a base for accounting. Correct. So what will happen now after the bookkeeping is done now, after the bookkeeping, because it will serve as a base for accounting. Now while preparing the financial or while doing the financial accounting, while doing the financial accounting, this bookkeeping will serve as a base for us. How it will serve as a base, you know better than me. Okay, now do anyone remember the definition of accounting? There were 3 words. I think that's not possible, but if someone has, then that's incredible. You can try it, sir, at least.
Recording, classifying, and interpreting.
Summarizing, interpreting. Correct. Correct. So what are the 3 words he said? He said that recording, classifying, and summarizing. These are the 3 words that you said: recording, classifying, summarizing. Mhm. Events or transaction involving monetary value. Correct. This is the very layman language definition. Okay, it's not even from the book. If you Okay, after that session, you go through the book words. Okay, these all are given in your mat. Okay, you'll understand more better after reading those. Okay, so what is financial accounting? I'm saying it is the recording, classifying, summarizing events or transactions which involve monetary value. Okay, we'll come to recording, classifying, summarizing, but events and transaction involving monetary value, that means anything which do not affects or cash, or which is not done in cash. Okay, that are not recorded in financial accounting. Correct. Now, suppose for an example, okay, this will be a very stupid example, but nothing right now is coming to my mind except this. Suppose for an example, I did a change of 500 rupees note. Correct. So I gave someone 500 rupees note and I took 500 rupees note. Correct. It has a monetary value, but has it impacted anything on my business?
No.
Yes, nothing. But if I say that I gave 500 rupees, but I only got 480 rupees. Now?
Yes.
Correct. So you are saying that the first transaction is that where you may not even have that financial records, but for the second you need to have that records. Correct. Very correct. To some extent. Where it's wrong, we'll come to that. Okay. Now, okay. So you got that what actually monetary value means. Okay. Monetary value not only means that something which can be measured in money, but it also means that something which will impact our cash. Correct. Because see, what is a business? Okay. What is a business? Business is nothing. Business is a place where people do come, they meet, they invest money. Okay. And something goes on. Okay. Something goes on which generates more and more money for them. Correct. So what is the primary activity over there is that different peoples are coming, they're meeting and they're investing in us. Correct. So when we are, that means if I'm the business, so I'm using all of your money. Correct. So if anything that has an impact on the money, that has to be informed to you, na? That yes, Sanjana, yes, Murli, Monisha, Lakshman, Alan, the amount of cash you have invested in us, this is the amount of cash that we have expended. Okay, that much we have earned. So all this records has to be given to you. Correct. And the records which I give na is what financial accounting is all about. Why? Because financial accounting involves recording. That means what is the word more similar with the recording? Journal. Journal. Okay, bookkeeping journal. Classifying is similar to the word
Ledger.
ledger. And summarizing is similar to
Trial balance.
trial balance. And after this, what we do? We prepare financial statements. What are those financial statements? Profit and loss account and balance sheet. Okay. Profit and loss account for determination of the profits or losses of the business, and balance sheet for identifying the position of the business, that where it is standing right now. Correct. Because what actually happens now at the beginning of the year now, okay, at the beginning of suppose for an example, beginning of financial year 23 and 24. Okay, so 22 and 23 was the end of the previous, that was the previous year for that. So when we see that, definitely in that year as well, we have done some financial accounting. Means there are we have prepared journals, ledgers, trial balance, then we have prepared financial statements. Okay, in relation with that, there are cash flow statements, there is a fund flow statement. All this forms part of financial statements. Okay, notes to accounts. Okay, everything. You'll read more and more once you move on to the group 2. Okay, company accounts part specifically, when we'll start, those who are there, you'll see that that's company account is nothing, that is a continuation of the financial accounting, where we are stopping. Okay, where there is a pause on the financial accounting, company accounting begins from that level. Okay, that's a discussion of a very later stage. But what actually is happening? Suppose for an example, for the financial year 22 and 23. Okay, what I have done, I've done the business. You all have invested in my business, and at the end of year, I'm giving you the financial statements. Okay, that means I'm giving you the journal, ledgers, trial balance. Okay, I'm giving you the profit and loss and balance sheet. So with the profit and loss, now you can determine that how much profit I have earned in the year. Correct. How much money I have generated, and with the balance sheet, they can know that what actually is the position of the business. Correct, because there we can easily see what is more, liability is more, okay, or we have more and more assets. Okay, what how the business is going to run. So on basis of those statements now we prepare something. Correct, we prepare some analysis, we predict something, that how much profit we are going to earn in the next year. Okay, how much better position will be, or how much better position our balance sheet will reflect in the next year. Correct, that's why we say that the prima facie, or the main objective of the financial accounting, is that it depicts the profit and losses, that how well a business has done in the past year, or in the year. Okay, and with the balance sheet we come to know that what actually is the position of the business. Okay, where our business is heading towards. Okay, where you all have invested money, where actually is that business going on. Okay, now let's take an example. Okay, you guys will reply, and with that reply will be clear with my words. Suppose for an example, if I say you that you have to invest in some company. Okay, you have to purchase the shares of a company. What is the first thing that you will do? Will you listen to me because I'm your sir, or you will do something? If yes, then what?
So we'll check the cash flow statement of the company.
Okay. Okay.
And
You'll check
also
only cash flow.
not only that, but mainly that, and also the profit making, like comparing the past year and the current year, how they are performing, past trends and all.
Okay. I was expecting a bit uh, more easier answer, but okay. So what actually she's saying is that when I'll ask her to invest in a company, for the time being now, avoid her a word of cash flow, because we are not into that right now. But yes, when we'll be in company accounts, we'll be discussing why she is saying that she'll be checking cash flow. Okay, so what is the very first thing you'll do? You'll check the profitability of the business. Correct. अरे ये business कितना कमाती है, ये कितना प्रॉफिट बनाती है कंपनी, मुझे ये देखना पड़ेगा सबसे पहले कि क्या ये मेरे रिटर्न्स लाके मुझे दे पाएगी. करेक्ट. नाउ सपोज फॉर एन एग्जांपल, if I ask you to invest in a company which has just incurred a loss of 15 crore, used sorry 15 lakh, will you invest in that just because I have said? No, you won't. Correct. Maybe you invest as well, but you will check at least. Okay, just a second, someone is joining. So what is the very first thing that you will do? You will check the profitability of the business. Correct. Not only profitability, audited and proposed figures. Correct. Correct, Murli. Correct. Okay. So does you are see what actually I'm trying to do today is that you understand why this is really required. Correct. So the very basic purpose which financial accounting, okay, general ledger, trial balance, profit and loss account, balance sheet, okay, will solve is that it will give you that what actually has to be done. Okay, like for example, okay, how much profitability, how much profit we are making in the which we have made in the current year. Okay, and what actually is the state, what actually is the position of our company. Okay. Okay. Now, Now, after the financial accounting is done, I'm not saying that cost accounting is the second step, but when we discuss, because our prima facie object is to discuss financial accounting, so we discuss it on a first hand. Okay. Now, next, the second is cost accounting. Can anyone say what actually, for what reason do we do cost accounting? What actually is the purpose of doing cost accounting?
The minimization of a cost of a firm and maximization of the production or output generated.
Correct, to a very to extent. Okay. To know and minimize the cost of a product. Okay. Cost accounting has, I will not say nothing to do with profit and loss, and okay, somewhere or other it has something to be done with that. Correct. But its actual objective, okay, or the motive behind its preparation is very simple, is that company does it. Okay. We CMAs actually are the one who will be doing this. Okay. We do this to know what actually should be the cost of a product. Okay. It is a kind of forecasting that we do. Okay. Based on basic assumptions. Okay. Some legitimate principles and all. We calculate the cost of a product. Now, let's have some discussing regarding the cost of it. Why do you think it is necessary to know the cost of a product? The very basic point which will come is you'll say that to determine its selling price. Correct. Until unless you know what will be the cost of a product, okay, and upon that what should be your profit percentage, how can you sell it? Correct. But the more basic thing is that they actually want to know that how much expenses will be incurred in producing such product. Okay, what are their expectations regarding this product? How much it will sell in the market, and how much they can earn from it? Okay, actually the cost accounting part, once you start in the paper 8, you will get a more wider view for that. Okay, but I'm just restricting my discussion up to this because we are not up to here. Okay, so just remember this see, like financial accounting is made for the outsiders. Okay, they are made for the stakeholders. Okay, they are made for the investors. They are made for outside peoples. Okay, they are made in a way so as they can be compared with some other business entities. They can be compared with the past records so as to know the profitability and position of the business. Okay, but cost accounting is what is a branch of study. Okay, cost accountancy is the branch of study that deals with the know-how and how to minimize the cost of a product. Okay, and this is cost accounting is generally for the manufacturing units. Correct. Because if you're a trading concern, if my business is regarding the trading, correct, so in that case I do not need to know the cost of a product. Correct. Because at what price I'm purchasing, I'll just add my profit percentage and sell it in the market. But for the manufacturing units, they need to know actually what cost at this product is being prepared for. Okay, I hope that much discussion was okay. Correct. You can bear with it. Now the next one comes management accounting. Okay, now whenever I talk about management accounting, it is a very wider perspective. Okay, it has a very wider scope. actually management accounting is nothing but is something which is prepared for the internal users. Okay. Similarly, the cost accounting as well. Correct. Have you ever do you ever know the cost of any product that you use? You know only the MRP, correct? Do you know that what how much actually it has costed the company? You will never ever know. Correct. So I can say that a difference between financial accounting, cost accounting, and management accounting is that financial accounting is prepared for the outsiders. So everyone knows that, but cost accounting and management accounting is for the internal users. Okay, it is for the management of the company for decision making. Okay, that's why in cost accounting there's a part, or in cost group 2 as well, there's a part of decision making tools. Okay, and there you'll read about marginal costing, standard costing, budgetary control. Okay, most probably those parts will be done by me, but we'll see how it goes. So management accounting is basically now you'll ask me like, sir, for financial accounting, bookkeeping serves as the record. Correct. For cost accounting, the internal members or the production unit of the company serves as a base. Correct. Because they can say actually, we are getting raw material at this price. Okay, this much of labor are working. We are paying that much of wages to them. So that helps in calculation of the cost of a product. But about the management accounting, what is more, what is very, what I can say, beautification of this field of study is that it actually imports data from financial accounting and cost accounting. Okay, but how do you think that in management accounting, okay, or in the reports of the management accounting, what they'll do? They'll just put you the profit and loss account balance sheet. Will that be done? Will that help in decision making? No. Many more things are there. Okay, some more internal matters are there where the management needs to decide, where the management needs to see that where their resources are being allocated to. Okay, so just have this clear frame of mind that management accounting is mainly what which deals with the internal. Okay, it deals with the decision making of the company. It helps the company or the management to allocate its resources in more better way. Okay, like what actually could have been done in place of this, in place of that, so as our resources could have been utilized more efficiently. Okay, what actually should have been done so that our wastage that is happening right now can be minimized. Okay, so actually it imports data from financial accounting and cost accounting only, but in a more, what I can say, in a more planned way. Okay, as per the management requirement. Okay, so is that clear to you all? If yes, then I'll move on to further discussions.
Yes, sir.
Yes, sir.
Okay. Regarding the definitions and all, okay, you can simply, after the class gets over, okay, whenever you get time, just open up the book, maybe initial 2-3 pages only, we'll find all this. Just read those definitions once, everything will be clear to you. Okay, we have discussed everything. Okay. Now our discussion will revolve around financial accounting. Okay, now we'll discuss something regarding accounting cycle. I think you have heard about it. You must have read about it, correct? Anywhere in your life. Okay, this accounting cycle is nothing but whatever we have discussed till now. Okay, so how this accounting cycle begins with? It begins with or better I can use the word, it begins with, because you know the term, bookkeeping. Okay, what is done from bookkeeping? What is done? We prepare journal, correct? From journal we move on to ledger, Correct. From ledger, we move on to trial balance. Okay. Now, once the trial balance is done, if it is matching, then okay, we'll go to the direct preparation of the financial statement. But if it is not matching, what we used to do, we used to pass some adjustment entries. Adjustment entries. After this, we'll prepare a adjusted trial balance. Adjusted trial balance. After this, what we'll do, we'll be preparing closing entries. After that, we'll prepare financial statement. Correct. Do you all agree with it? Now, if you put them in a cycle, okay, it's tough for me to prepare a circle, so I did it in this way. Okay, and after financial statement, again for the next year, bookkeeping will begin. Correct. Bookkeeping will begin, and after that again journal, ledger, trial balance. Okay, each and every word that I have written is clear to you or not?
Clear, sir.
So let's have a quick discussion as well if needed. So bookkeeping is what? Is a recording of the transaction at an initial level or at a grassroots. Correct. After that, what we do after that, we prepare journal so that everything is done in a chronological manner. Correct. Like if something has happened at the beginning of the year, that will tend to appear at the top of the journal. But if anything which is happened at the mid of the year, that tends to appear in the midway somewhere. Okay. And if anything which has happened at the last day of the accounting year or the financial year, so in that case, that will appear at the end of the journal. Okay, after we have prepared the journal, we move on to the ledger, which is nothing, which is but a more presentable format and a shorter format of journal only. Correct, because we take accounts from journal only and we prepare ledger account. Correct, cash account, bank account, whatever accounts or whatever the transactions have affected the accounts, we take this account in the ledger account and we prepare an account statement form. Correct. From there, we do the opening entries and closing entries. Okay, we post that opening entries and closing entries in trial balance according to what has a debit balance, what has a credit balance, and then we try to match them. Correct. Once it's done, then bread and butter, we move on to the financial statement. But suppose, for an example, our trial balance is not matching. Okay. In fact, there is a rectification of error chapter there. Okay, where we'll learn more about this. That if trial balance matches also, then also there's sometimes there are some mistakes. Okay, what are those? In rectifications or error? I hope I will be able to make you more clear regarding that. Okay, if it is not matching, then in this adjustment entry is nothing but what we'll learn in rectification of errors is what adjustment entries is all about. Once the entries are passed, we'll prepare an adjusted trial balance, which is nothing, which will show the effect of adjustment entries as well. Okay, then we'll prepare the closing entries. That means how it has to be closed, and then we'll prepare financial statement. In financial statement, what I mean to say is profit and loss account, balance sheet, okay, and many other things. But right now, let's restrict it up to profit and loss account and balance sheet. Okay. Clear to everybody? Then we can move ahead.
Yes, sir. Just a second. Now whenever we are reading something, we discuss something which is known as
objectives. Correct. Why? Objectives has a simple meaning. Why? Why do you do this? Correct. You also say, sir, what? Why actually it was needed? Na? We were well and good by not doing accounting. करेक्ट. क्या जरूरत थी सर लाने की? सब्जेक्ट बन गया ना, अब पढ़ो फिर पास करो. Now the objectives. Okay, help me out with the objectives of accounting. I hope you can help me right now. What will the first? At least 2, 3 you can help me.
Sir, to know the profit and loss of the business.
Correct. To know the, I'm just writing profit and loss know-how. Okay, I'm writing it in very short form. Then the next will be
Maintaining of records.
maintenance of record. Okay. Anything more? Something we discussed regarding position. Financial position. Of the entity. Okay, entity, firm, business, these all are synonyms to each other. Okay, to know the financial position of the entity. Okay, one thing that we discussed as well, but might not be in points. It serves as a report for outsiders. Correct. For our stakeholders, for our investors, debtors, skaters. Okay. They know the company in a more better way, that how actually it is performing. Correct. We discussed that as well. Okay. It helps in comparison. Correct. How the comparison? This year can be compared with the last year. Correct. Not only within the organization. In fact, two business entities can be kept at a parallel place and they both can be compared that who have performed well. Correct. These are simple things. You all agree to it. Correct.
Yes.
Anything more you feel like there it should be? Let's keep
Sir,
it one-on-one. Let's
helps in decision making.
helps in decision making. Very correct. In fact, that was out of my mind as well. Helps in decision making. Anything more you feel like that should be there, sir? Manisha, Alan, Lakshman, Murli. Keep it interactive. Okay. Sometimes keep on talking so that you don't feel sleepy and everything hits on your head. Okay. Remember one thing, once you do a mistake in something na, and if I or anyone else correct it na, you'll remember it for your lifetime. But if you don't even make a mistake na, somewhere or other you are missing the opportunity to learn new things. Anything more? Because nothing is coming to my mind. Okay, I'm not saying that only this much is the objective it has. It has n number of objectives, but right now I'm also having only this. Okay. Okay, so what we discussed the objective, at first it helps us to know the profitability and it helps us to know the overall performance of the business. Then it serves as a records, correct? So that if any day any compliance has to be made, okay, The financial statements can be used as a purpose for that. Okay, it helps us to know the financial position of an entity. Correct. It acts as a statement of comparison within the organization and between two organizations as well. Okay, for the outsiders, for the stakeholders, for the investors, debtors, and creditors. Okay, for them it serves as a record. Okay, so that their decisions can be made in a more up way. Okay, and the last but not the least is that it helps in the decision making as correct. Based on these statements, management or the company can improvise or can work on those areas, okay, where they feel that they have to, so as to increase the overall profitability and performance in the business. Correct. So let's have a quick recap. Whatever we have done till now, we discussed about the different fields of accounting. Correct. We started with the very basic thing, that is bookkeeping, which is nothing but at a grassroots level, just recording, okay, where no principles, nothing has been followed. It is just a mere, it will serve as a record for us. Then we start with the financial accounting, okay, where recording, classifying, and summarizing, that means general, ledger, and trial balance, and with the help of all those, financial statements are prepared to know the overall profitability and position of the your organization. Then we discussed about cost accounting, another field of accounting, which is nothing but is more concerned about the internal matters. Okay, where the one of the most important and foremost point is that it helps, or where the cost of the product is calculated. Generally, cost of the product is calculated. Okay, and to know how to minimize the cost as well. Okay, so as to know the overall more profitability of the business. Correct. Then we talked about management accounting. Management accounting is a very wider aspect, where where it's completely about the decision making. Okay, that what management thinks, okay, how they have performed. Okay, they compare this financial accounting only, but that is prepared in a more different way, more appropriate way, so that it helps in decision making for them. Okay, it helps in uh, deciding them their future course of action regarding the utilization of the resources. Correct. I think we have talked so much, but we have done only this, the sad reality. Correct. Okay, so I will move on to the next part. Okay, so now we are going to start the discussion regarding basic assumption in financial accounting. Okay, I've almost got answers from you all. Okay, that's good that you know. So the very first thing is that we got the answer of going concern concept. Okay, the very first thing is going concern concept. What actually it says, see, by the name it suggests something which will kept on going. Okay, and the assumption is as similar to it is that business owners may come and go, but business stays. Correct. Now, suppose for an example, my grandfather started a business. Okay, but is he there right now? No, he's not there. Correct. But is the business is there? Yes, the business is still there. Why? Because this is the basic assumption. Okay, if like it used to be in the time of what I can say, when there used to be kings and all. Okay, so what used to happen? King used to die, their son used to take the place. Correct. They will die, their son will take the place. Correct. Similarly, here also it has the same assumption. Okay, that business is assumed to exist for an indefinite period. Okay, and owners may come and go, but business remains the same. Okay, the identity of the owner changes from time to time. Okay, but business remains the same. Okay, this is the very basic thing which has to be discussed. If you need more information, do follow your mat. Okay. The next is what I got. I think I was. Let me check the chat. I'll put up your all's first. Okay. Then I got matching concept, but matching concept is near about principles. Business entity concept or separate legal entity. Now, whenever you will study company law, you will remember my name that I told you, separate legal entity. The same word is there in the features of a company, separate legal entity. So what actually it says? It says now see what when you read company law, you will understand these things in a more better way. But I'll try to do the maximum that I can. Is that see, I have a business, correct? That means if I'm running a business and you all are investing in my business, that doesn't mean that you are investing in me. You are investing in the business. Why so? Because as per the assumptions, okay, or as per the trends what have been followed, it is assumed that me and my business are two different entities. Okay. So if any day some fraud has been done, okay, I suppose for an example, I took a loan from you all. Okay, say for example, I took a loan from Manisha, okay, and in the name of the business. And after certain period of time, if I am unable to pay, you cannot charge me. Okay. Now you can ask me, Arey sir, you only took it, na? You only misused it. I told you, you'll understand better in the company law. Okay. There in company law, you'll read something as lifting of corporate veil. Okay, which is all about that whenever some frauds like this happen, company do lips the this separate legal entity and they try to find out that who behind the company is mismanaging this one. Okay, who is the fraud over here? Either the company or me. Correct. Because this separate legal entity or business entity concept protects me, na? That no outsiders can charge me. If I have done something in the name of the company should be taken on charge. Correct. But there is a topic, a lifting of corporate veil, okay, which particularly talks about that whenever something like this happens, na, company do lift where necessary, not every places, wherever court or the uh, deciders think that it's necessary to lift the corporate veil. Okay, that means to ignore the concept of separate legal entity, and they will come to me, they will caught me, okay, they will catch me, they will investigate, and they will try to find out that am I the one who has done the mismanagement of the funds? Okay, so let's come back to a financial accounting. Okay, so here the assumption is basic entity concept. Okay, the simple meaning is that here what it assumes, what it says is that the business and the owner are two different entities. Okay, and in case of anything or any what I say mismanagement or in case of any fraud and all, if that has been done in the name of the company, you cannot charge me. You have to file a case against the company, not against. I'm not liable for that. Okay. The next is that money measurement concept. What is money measurement concept? Will anyone try on that? Anyone
So,
wants? Hmm?
uh, so
Yes,
basically, money measurement concepts tell that accounts are being maintained on monetary terms, like focuses on the monetary aspect.
correct. So the recording, because in the definition as well we read, na, events and transactions having monetary value. Correct. So anything which do not have will have any monetary impact. Okay. With the word monetary impact, what I mean to say is not that dealing in cash. Like my example, correct. 500 rupees note is converted into 500 rupees note. So that is a monetary term, but that is having no impact on my money. Correct. Nothing is going out, nothing is coming in. So why to record? It means something which will affect our money. Correct. Something is going out, something is coming in. Okay. In exchange of values, exchange of values is happening. Correct. So that will be recorded. And we know financial accounting is what deals with the monetary term. Okay. Like until and unless there will be monetary terms, it won't be recorded. Okay. Next is accrual concept. I think you all can try on this as well. This is very simple. You can help me out in this as well. Sanjana, will you try?
Sir, I'm not sure. Like,
Yeah, try. No issues. I do not need surety. I need participation.
sir, it is basically.
Okay. Okay. Sanjana, speak first, then Manisha, be ready with your answer. Yes, Sanjana.
Sir, it is used to recognize the revenue and expenses in a business, like the income and expenses.
Okay. Okay. Manisha.
So it is to it have to recognize the revenues and the expenses, maybe the incomes that have been earned or already spent. It, I mean, the past records. It should not be recorded the future expenses or incomes like that. Is that right?
Correct. To the bit extent, Lakshman, correct. But actually, accrual means, you know what, something which is credit. Okay. So what actually this accrual concept says that transactions involving monetary value will be recorded. That's correct by money measurement concept. But it does not only means that only what have been dealt with cash will be recorded. Accrual concept means if something which has been done in credit, now that also has to be recorded. And that is the reason why we find creditors account. Correct. We found bills payable account. Okay. Accrual concept is more towards this. Okay. What you said, na, income and expenditure recognized in same year, it's something relating to the matching concept. Okay. Accrual concept here simply means that both cash and credit transactions, okay, means it has not yet affected the cash, but yes, you have done something which will have a future impact on your monetary value. That has to be accrued. Correct. Due or accrued. Correct. So accrual concept simple means that recognition of both cash and credit transactions. Clear? Simple word. But good, you tried and now you'll never ever forget accrual concept. Okay. After 3 months, I'll ask you again. Save the date on your phone after 3 months. Then last but not the least is the accounting period concept. Okay, so accounting period concept is what? Now see, we just now we read about going concern concept, correct? So business is going to run for an indefinite period, correct? But the one who have invested the money, okay, will they wait for the indefinite period to see actually right now, for example, you invested in a company in the year 2000. It has been 2023, still you don't know how much this company has earned, how much is there, how much money will get. Okay, will that work for you? If you're okay with this, then I'll try to cut out this basic assumption. Okay, no one will be okay. Correct. So we know business is going to run for indefinite period, but that has to be separated into fixed intervals of time where a statement or what I mean, reports has to be provided so as to know the overall performance and profitability of the business. Okay, so accounting period concept simply says the same. Okay, that there has to be a fixed uh, period or fixed period of accounting cycle. Okay, you do a business in that cycle and after that prepare a report on that. What actually is that prepared report? That report is nothing. General, ledger, trial balance and financial statements. Correct? And similarly, that can be in two ways. One can be the calendar year. calendar year, and one is that financial year. Calendar year means Jan to December, correct? And financial year means discussed yesterday in detail.
April to March.
April to March. April to March. Correct. So these were some basic assumptions, okay, regarding the financial accounting. Okay, that's more than enough. Okay, if you remember the names as well, that will serve the purpose for you. Okay, whatever we're discussing right now, what I expect from here, definitely I do not expect, or no one can expect some practical questions. But yes, MCQs, fill in the blanks. Maybe if you are lucky enough, you'll get a 5 marks short note. Correct. So these all are important. That's what I'm discussing. So let's recap basic assumption what we discussed. At first, we discussed that business is here for indefinite players. Owners may come and go, but business will stay. Okay. If business has been created by some, what I can say, because business has to be created, na? It has to be created. So it has to be closed as well. Okay. It cannot be like if someone has discontinued, the business has ended. No. For that, you have to file to the department and you have to inform, okay, that is liquidation, that we call it. The business is going into liquidation, means it is converting into cash and soon it will lay off. Okay. The second we read about business entity concept or separate legal entity concept. It has a simple saying that it differentiates the identity between the business entity and the business owner. Okay, we'll keep it short and simple. Money measurement concept, as said by Sanjana, correct, that here we only recognize those events, those transactions which has a monetary value or monetary impact on it, on our business. Accrual concept is where we recognize both the cash and credit transactions. Okay. And accounting period concept simply says that we know business is going to run for an indefinite period. Okay. But there has to be a fixed period of time, a fixed accounting cycle, after which you have to prepare reports and provide it to others so as to know the overall profitability and performance of the business. Correct? I can move ahead. Hope so. Principles of accounting. Is there any delay?
No, sir.
Okay, so my video and the screen both are going hand to hand, correct? You're getting everything at the same pace. Then okay, but from my side, I can see a bit lag. Okay. So the principles of accounting, see, there are n number of principles. Okay, 14, 15 principles are there, but I won't discuss all. Okay, well, I'll discuss only the things which are needed. Rest you can just go through the book. You just need to read it once, you'll get that. Okay, the first principle comes out to be, I think I got one principle from chat, I think. What was that? Conservation method, correct. I got conservatism concept. Okay. Now, what actually is a conservatism concept is a conservative. You know the meaning of conservative, correct? Okay, when you preserve something, correct? A kind of preservance is what preservance is the word where conservative word has been derived from. Now, what actually they try to say? Conserve, what to conserve in business? क्या सोच के करना है business? So conservatism concept simply says a very basic thing is that you can, okay, I got something. Traditional. No, for traditional, we'll go to historical cost concept. Anticipation. Yes. It starts with anticipation. Correct. So conservatism simply means that here na you can identify future losses. Okay. Suppose for an example, if you feel like I'm going to have prudence, correct, concept of prudence, perfect word, Lakshman, prudence. Okay, concept of prudence is also is the word which is known as. They say that actually what they say na that suppose for an example, okay, my business I can feel like in next 6 to 7 months na I'm going to incur some loss. Okay, why I feel so? Maybe due to market conditions and all, maybe the falling demand of mine. So what this principle says that you can identify future losses. Okay, that's the reason why now whenever we have a bad debt, we also start to provision for bad debt. Correct. Whenever we have debtors, we start with the provision for debtors, bad debt, provision for bad debt. Correct. Like we start to assume that if this much of debt I have now, then I feel like as per my business trend, what I have seen in the past few years, now I can feel like that in this 1500 now 200 is definitely it's what I'm going to incur a loss. Correct. So what I start to conserve it. I start from today itself, I start to maintain in the book of accounts so that slowly I can write it off. Okay. But suppose for an example, if I can see that right now our product demand is increasing a bit. Okay. And I feel like in the next 4 to 5 months now, no one else is going to come near me. Okay, my product is so good, consumers are loving it in so much way that I feel like my sales will be boosted. Okay, I'll have 5 times more profits. So this conservatism concept says that okay, you are going to have profit, good, very good, but please don't recognize it in your books of account. Okay, you can conserve it. Okay, you can anticipate future losses, but you cannot anticipate future profits. Profits will be recorded once and only when you will earn it. But yeah, for loss you can start the provisions. Okay, you can anticipate future losses but not future profits. Is it clear? Prudence is the perfect word, Lakshman said. Okay. Now the next will be matching concept. What actually is a matching concept? You can try a bit. You can try a bit matching concept. Whatever you discussed few minutes before, you all said regarding that accrual, that is the same thing. That every transaction, okay, I'm writing this, every transaction has two effects. One is revenue effect and one is expense effect. And both are to be identified in the books of account. That is the reason why we say sold goods for cash. So what is coming to us? We are having revenue, correct? But something is going out. So what we do? We do cash account debit to sales, correct? So this is what matching concept is. Matching concept says that every transaction has a revenue effect and an expense effect. Okay, and you have to, if you are recognizing a revenue effect, you have to identify the expenses effect relating to that revenue as well in your books of account. And that is only why we say a debit and credit. Otherwise, everything could have been debited, everything could have been credited. Correct? Duality also, I think I got it from someone. Dual aspect concept. What is this dual aspect concept? I'm writing something. If you agree to it, reply. Do you agree to it? Do you feel
Yes,
like that this
sir.
is a dual aspect? Correct. So assets are having same effect as if liability plus capital. So what does it mean? What does this statement is trying to convey to us? Try it once. If you can, then that's perfect. No one is going to try.
Sir, it shows the same movement of funds in an organization.
Correct. It recognizes the movement of funds. Correct. Perfect word. Movement of funds. Movement of funds. Uh, okay. Okay. For layman language, it's correct. Okay. Movement of funds. Like actually, where my funds are going. Correct. Whatever the liability is arising on me, whatever the investment has come to me, okay, where it has been invested. Correct. So the flow of funds have begun from, first of all, it has started from the owner's equity. Capital is nothing but owner's equity. Okay. It has another name of owner's equity. So at first, it has started from the owner's equity. Correct. Like suppose for an example, today I'm starting in business. Okay. Lakshman and Manisha, they both are the investors. Correct. So from where it is started, from where I am starting, from where the funds have started, from Lakshman and Manisha. Okay, then I have started my operations. Then what happened now? I feel that this is not enough. I need some more money. So what I did, I went to Alan for further investments and I went to Sanjana for loan. Correct. So these all are what? This capital is owner's equity and Alan is now will also be added to the capital. But where Sanjana went, where Sanjana went into the liability part because I took a loan from her. Correct. And where this cash is flowing from, this cash is flowing from them, means from me, particularly from the business perspective, it is flowing from me. That is the liability and owner's equity, and where it is flowing towards assets. Assets means whatever we have done till now, whatever we have acquired till now. Okay. In fact, in the assets, our profit, our anticipated profit, everything is added. Okay, at a higher level, you'll come to know that actually asset has everything that you think that is mine in the business. Okay, in fact, the profit, anticipated profit, okay, that all comes under the asset. So dual aspect concept is nothing. Okay. Aspect concept is mainly regarding the flow of funds as told by the Sanjana. Okay, that from where actually the cash is flowing and where it is going. Okay, so is my assets equal to liability plus capital? If it is, then yes, the funds have been managed well. If not, then there might be some situations where misdeeds have been done in the company. Okay. Correct. Okay, let's do this now. Let's solve a small example with it. Okay, this assets liability capital. Now, suppose for an example, Lakshman invested 10 lakh rupees in my business. Correct. So Lakshman is the investors, means it is the capital for my business. Correct. So suppose for example, right now I have no liability. I have just started the business. In capital, I will have this Lakshman's rupees of 10 lakh rupees. Correct, because he has invested in the business. Correct. Can you say where in the asset will this amount will be reflected? Right now I've said I've invested nothing. Can anyone try? Where in the asset sides can this cash go in? This will go
cash and cash equivalent.
Correct. It will go in cash account. That is, means in my cash will show a 10 lakh of balance. Correct. So this statement is proven right now that whatever liability and capital we have in the business, that is almost and always equal to the asset we have. Correct. That's why I said that whatever we think we have in the business is our asset. Okay. With more examples, with more things to be done, we'll get a more clear and clearer idea. Okay. Now we'll move to the next principle, which is historical cost concept. Now see, we all know this concept. Okay, just we have not yet just is that you might not have discussed in it a concept way. How? Suppose for an example, okay, there is a business which has started in the year 2010. Correct. So definitely it has purchased a machinery of worth of rupees, say for example 2 lakh rupees. Correct. Now we are standing in the year 2023 and it is the beginning of just kind of beginning. So we have last year's financial statements with us. Correct. If you see the all the years data now, we'll see that now every year the machinery that machine is of 2 lakh rupees only. Why so? But in today's market, if you go to purchase the machinery now, you will see that machinery costs around rupees 10 lakh rupees. Correct. It has the value has increased from time, but for our books of account, nothing has increased. Yeah, we do provide depreciation on it, but the value remains the same. No? It's always on 2 lakh, straight line method, 10% 2 lakh. So that means for up to 10 years, it will be there. Correct. 20,000, 20,000, 20,000, 20,000, 20,000 for the 10 years. Correct. So this is what historical cost concepts always says that recognize your asset on your historical cost. No matter whatever market value it is having today. Correct. But at what expense or at what cost you bought that into your business is what the cost will be for you until and unless that asset is completely written off. Okay. Okay, but you know, this historical cost concept has a kind of, I can say it has a disadvantages. Correct. What actually happens now? See, what is that word that we associate with the balance sheet more? Financial position, correct? This is the word that we mainly associated with the word balance sheet. We say that balance sheet shows the true and fair view picture, okay, financial position of the company. But do you think that a machinery which is costing right now around 10 lakh rupees is being shown in my books of rupees 2 lakh rupees? Is that a correct financial position of my company? Comment. I want a reply from everyone.
Sir, could you please repeat?
Yes.
Sir, could you please repeat?
Yeah, I said that. See, the term which we generally use, okay, with the balance sheet is that it shows a true and fair view picture of the company. It shows the financial position of the company. Correct. But a machine which in today's day has a cost of rupees 10 lakh rupees is being shown in your book at rupees 2 lakh rupees. Is that what actually depicts the financial position of your company? Do you agree to it? That yes, sir, correct है ना? यही तो होना चाहिए. Do you agree to it? I got reply from Lakshman. Not fair. Not fair, ji, not fair.
Sir,
Yes.
it is an estimated one. Like it is on the estimation of taking depreciation for.
No. I'm saying I'm saying for right now, let's ignore the point of depreciation because depreciation is for nothing. Now we're charging it from PL. Correct. So machinery value is decreasing, na, but ultimately the depreciation is being calculated on 2 lakh rupees. Na? But right now that machine has a value of 10 lakh rupees. Correct. So is that what we say correct financial position for a company? I'm asking that. Do you think? What do you guys think? That's just discussing with you all. That yes, sir. Is that true or it is not fair? Like Lakshman has given, not fair, not fair. It is fair a bit. Why? It is fair a bit, but not totally. Why? Now, suppose for example, I bought it for 2 lakh rupees. Now, suppose in this example, sir, whatever we incurred, yes, yes, complete it. Complete it. After that, I'll read. Okay. Now, suppose for an example, Lakshman has invested 10 lakh rupees. So, at what cost I have done that asset, that machinery, I have got it for 2 lakh rupees. So, what actually I have done, this 2 lakh and cash is 8 lakh rupees. Correct? And here the capital would 10 lakh only. Nothing changed. No, that is true and fair to the point how much investment I have got, but not as per the market value. So if we compare that financial position in accordance with the owner's equity, that's perfect. But if you go with the market value, that's not correct. Okay. A very detailed discussion just happened. Okay, it is correct to some bit as per when we come, sir, whatever we incurred for that asset. Correct, na? It's always regarding that. Okay, so it has both the view that it's correct according to the owner's equity or about the internal position of the business. But if you compare it with another business who has just purchased that machinery that has a value of 10 lakh rupees in it, that will sound more stable to you rather than your business. Correct. So for outside comparison, it tends to be vague at point, but for inside comparisons, it's perfect. Okay. And historical cost concept we just discussed. Now we'll go to balance sheet equation concept. Balance sheet equation concept, I hope you guys know that. Correct? I'm writing it. If you don't agree, do tell. Expenses plus losses plus assets is equal to revenue plus profit plus liability. Here I'm not writing capital separately. I mean, I've included that in liability. You guys agree to it, correct? Has happened just now. Okay, so this is what balance sheet equation concept clearly says, that whenever you are preparing a balance sheet or you will be comparing a balance sheet for the positions, okay, it should always depict the picture like this, that whether your expenses, losses and assets equals to your revenues, profits or liability, provided whenever there will be losses, losses will come, whenever there will be profit, profit will come. One among them will come, none other will not come. Correct. So if that is equal, then that is what is a true and fair view from your balance sheet point of view. Okay. Here we have nothing more to discuss, but it's about this. what actually it is. You guys are clear with it, correct? I can move on. Okay, so it's almost 8:45. Okay, so what we'll do for today, we'll keep it up to here. I need 2 or 3 more as principles are there, which we'll be discussing in the next session, and then we'll move on to our next further discussed topic. That will be capital and revenue transactions. Okay, capital transaction and revenue transactions, and after that, we'll start with the rectifications of others, means the basic of accounting. Okay, if you go to your mat now, okay, this is the new mat. Let me come to your old mat. Okay. Okay, you'll see that a partnership has a cut on it, because when I used to study, I left the partnership. Okay, now see, we're done with the basic part. Okay, because basics will be covered every time we will study something. Generally accepted accounting principles, accounting concepts and conventions. We are doing this. Okay, we have completed the maximum of it. Then we have capital and revenue transaction. Then we'll go for depreciation. Then we'll go for rectifications. Okay, for accounting now we'll go as it is given in the book. Okay, because the way they have organized this, this tends to be like it has a bit. So at the first thing that will come depreciation easy, then rectification a bit more, then bill of exchange a bit more, consignment bit more. Okay. Okay, so for today we'll keep it up to here. Okay, we'll continue in the next session. We'll see you everyone in the next session. Okay, for those who are seeing it on record, as usual, if you face any issue, feel free to contact me. Okay, so bye bye everybody, and thank you.